So I was going to take the day off, but I received a number of
You've got
emails
mail.
about listening to the market and how to get better at that. So I decided to do a quick video response. I want to warn you to be prepared to pause and take some screenshots because I'm going to throw a few diagrams and visuals at you, and you'll want to keep these. At some point, I'm sure we'll come back and cover these in greater detail. We really get into it, I need to set the stage a little bit. When it comes to investing, most of the time our analysis tends to focus on macro conditions, fundamentals, and technicals. If you've been around for a while, you've heard me talk about behavioral finance and how fundamentally it's a key part of my investing foundation. Ultimately, behavioral finance it focuses on cognition and emotions and how that ultimately impacts market behavior. And it's kind of this beautiful blending of psychology, sociology, biology, and even neurobiology. And I find it to be really, really valuable. I love this quote from Benjamin Graham, and it says, "The investor's chief problem and even his worst enemy or her is likely to be themselves." And that's what behavioral finance is really about. And so the study of the effects of psychology on investors and financial markets really explains why investors often lack self-control, don't always act in their own best interests, and kind of make these decisions based off of the personal biases instead of facts. It's actually a really fascinating area of study. As a result of all this, there are a number of theories or models that have been developed that kind of attach human behavior, psychology, and emotions to each aspect of an investment market cycle. And what I love about these models is that you don't need all this technical or fundamental analysis in order to understand these. You simply need to understand people and our emotions. Understanding these models is just one of the ways that we can actually learn how to truly listen to the market. The first model on your screen is the anatomy of a bubble. And you've seen this before on my channel, and it's my favorite to share with people because of its simplicity. It's really easy to digest and it doesn't need much explanation. Next is on your screen is the psychology of a market cycle. And while this visually, there's a lot going on here, this is probably the chart I reference the most when I'm trying to really hone in and figure out what's going on with the market. My suggestion is that you take the time to really study this model. Again, nothing super technical here, but look at the words that are used in the diagram: disbelief, thrill, anxiety, capitulation, anger. If you actually forced me right now to try to identify where we are using this model, I'd probably say we're more towards the tail end of capitulation. When I talk to my local coin shop guys, they tell me while product is flying off the shelves, they're also seeing a lot of people liquidate and sell their metals. My interpretation: capitulation. If you're following the graph, what do you see next? You see a big drop in price and then anger. When you think about what you've seen in the marketplace, what you read, what do you hear on discussion boards, have you seen anger yet? Yeah, maybe a little. We haven't, definitely haven't seen depression or despair. So solely looking at this diagram, I get a sense of where we are in the markets. Now I layer that information with technicals of like the gold and silver prices and the macro conditions like the interest rate and the Dixie and etc. I feel like we have further to fall looking at this chart. The market really hasn't broken the backs of the weak investors yet. The next chart is the roller coaster of emotions. And this is just another way to look at investor behavior and where we are in a cycle. So pause and take a screenshot of this one real quickly. And what you'll start to see is that all these different charts offer something slightly different. And so you kind of have to discern what's best for you or what most resonates with you. But they're all a little bit different, but they all give you really good information. The next model I'm sharing is the John Hancock, and they call it Take the Emotions Out of Investing chart. Finally, I'm showing you this 4 market phases. And while this doesn't really speak to the emotions or psychology in the market, I do think it's very nice, simple, and easy way to get a quick glimpse at the markets. I want this to be a quick hitting video, so let's pull this together real quickly with a couple of key points. One, these models are just guides and not something you should definitively hold on to or follow in this kind of dogmatic way. I want you to think about it as one data point, not to be used in isolation. Two, you don't have to be a high paid analyst to understand markets and their behaviors over the long term. Now, day to day, it's completely different, but over the long term, you can use these things to help. Three, using very simple tools like these is how you start to actually refine your ability to listen to the market. The behavior of the folks, of the people, is what really gives you great clues about what's going on. If you've been with Stackers University throughout our journey, and if you haven't, go ahead and hit that subscribe button right now so that you can stay up to date with this. But I want you to start to feel more confident that you have information and knowledge, that you have the ability to listen to the markets and make your own assessment. And that if you can really understand human behavior, you can really understand markets. After all, it's all shaped by how we behave collectively. In the comments section, based on the second chart, the psychology of a market cycle, where do you think we are? And if you plan to use these charts, how do you think you're going to use them? Also, you can comment, do you think prices will increase or decrease before the Fed meeting? And do you think we're going to get a 75 or 100 basis point increase in the rate? No matter what, give yourself an A for seeing this video all the way through. You're my A+ students. Always stack smarter, never stop learning.